Newcrest, Newmont. So Newmont have upped their bid. Unsurprisingly, they've gone for a bigger offer, 0.4 Newmont shares per Newcrest share, valuing it a bit over $32 at today's Newmont share price. Let's get into it, lads. What's going on?
Well, mate, this is obviously a giant deal. It's the biggest deal.
Bloody huge.
It's the biggest deal, in Australia for the year. It's the biggest deal in mining for the year. It's massive by every stretch of the imagination. And there's going to be that much content out there about this deal that I'm not going to dive into rationale and what it means from that sort of perspective. I think the insight that I think I can add here is actually just talking about the M&A strategy that's been taken on here, primarily by the board of Newcrest in order to get this result. So this deal now, as it appears, Newcrest shareholders, they're going to be getting 0.4 Newmont shares per Newcrest share, plus the Newcrest shareholders, they're also going to receive a special franked dividend of US $1.10 just to flush out its franking credits. And
so that's once they do this deal, because they won't be trading on the ASX anymore, those franking credits would be still there. They need to get rid of them because they've paid the tax already. Is that what that means?
I actually think that they will probably still trade on the ASX. It'll just be the case that the CDIs of Newmont will trade on the ASX, kind of similar to what you saw when Block took over Afterpay last year. So it probably will, but the franking credits are effectively just a function of the Australian tax regime that we have here, and it only really benefits Australian domiciled shareholders. So back to the M&A strategy that's happened here. I'll just do a little quick recap of what the announcements sort of were to the market and what we could see from the outside looking in on this deal. The first proposal came from Newmont, and it was knocked back by the Newcrest board behind closed doors. This all happened privately before it was ever announced to the market, and that was at an exchange ratio of 0.363 Newmont shares per Newcrest share. And the second proposal came in at 0.38, so that's a bit of a kicker already. And this one was knocked back. However, it was actually leaked before it was knocked back. So it was leaked to the market, and then essentially Newcrest had to come out and say that they're considering this proposal, and they were confirming the media speculation, but they were considering the proposal. And it took them 10 days before they actually provided what their indication was going to be on this proposal. And when they finally did that on the 16th of February, it was pretty interesting language and a pretty interesting strategy that you could see some real thinking into what the board there was trying to do. On that announcement on the 16th of February, they said that the value still wasn't there at that price effectively, but their plan was to open the door slightly, and they actually gave Newcrest some non-public information on a non-exclusive basis, was their wording. And what that means in banking jargon is essentially the board believed that they weren't getting full value or appropriate value for the company at that exchange ratio. And in an effort to get value to where they believed it actually was, they've provided Newmont with what I think is probably just a brief investor pack. But the main thing, if you're trying to persuade someone on value, is giving them a financial model. And this financial model, it will ultimately just be a culmination of all of the assets, and that'll spit itself out into an NPV or a NAV per share. And that number is used as the basis to argue your value. So this model is typically just a corporate model, and bankers will add a little bit of overlay to that to sort of make it look a bit nicer, and sometimes juice some assumptions to paint it in the highest color. And the other piece of information there was that it was on a non-exclusive basis. So it wouldn't be surprising to me if what Newcrest strategy here was to actually share that information with other potential bidders in order to try and create a little bit of competitive tension. So you could think of other potential acquirers such as a Barrick or an Agnico being shared this information as well, just to test the market to see if they could actually create a bit of competitive tension and get the best potential outcome for shareholders. Now, of course, we don't know what those conversations were or what they might have been. It's sort of none of that's been disclosed. However, if you look at what's happened now, you can basically infer that this strategy has worked remarkably well for them, because in this later offer, it's a 16% kicker on the last one. And in total, it actually represents a 41.2% premium to Newcrest's undisturbed 30-day volume-weighted average price. And why is this such a big deal? You know, on the last episode, I mentioned 40% is a pretty typical premium in M&A. Yes, it is at the small end of town. Rarely do you ever see a 40% premium for a $32 billion takeover. It's pretty spectacular in mining and especially in gold. And yes, the gold price has increased in the month since the initial announcement to market, but it's still pretty substantial. Cast your mind back to the Northern Star Saracen deal, and it was a fraction of the size. But that was effectively a very low premium merger of equals. There was just a special dividend for Saracen shareholders, and they got it over the line. So, Newcrest, they've now agreed to fully open the door. What does that mean? They've granted exclusive due diligence to Newmont, and it's going to be a bilateral due diligence process that happens over 4 weeks. Both parties have access to the data room of each other, and they're just confirming that value makes sense with all this other information. And it looks like this deal will probably go ahead with no more spanners in the works.
Yeah, I think what you highlighted at the end there, Trav, access to the data room, that's a term we see thrown around lots in financial media and mining media. And what that's essentially doing at this stage is giving Newmont access to all the information, be it valuation, geological and everything that Newcrest has accumulated on its asset, which will give Newmont a more sturdy foundation to value all those assets and ensure that they're paying the right price for this company.
Right. 2 things I want to ask you before we move on. Do you see this as a good deal long-term, considering Newcrest was trading up near $40 back in 2019? Have they effectively, even though with a 40-odd% premium, do you think they've got them pretty cheap?
The one piece of information I can add there is Newmont have opportunistically made this bid because it looks like Newcrest is a bit beaten up. They're not. Everyone is scared of paying too much for a company, especially when you're talking these sort of quantums. So, Newmont might have for a long time thought there's a rationale to put the two companies together, but they're not going to make a takeover offer back when they're at their all-time high. They know they're going to probably have to pay a premium of some description. I imagine at the beginning they didn't think a 40% premium was what it was going to take, but they're happy to pay it seems, when they've been persuaded on value. So, look, I think ultimately, given where Newcrest's share price was trading earlier this year, this is a fantastic outcome for Newcrest shareholders. However, I can't comment on what might have led to the company sort of share price dwindling in the way it has since 2019.
Now, second thing, Lihir, which is Newcrest, I think it is their biggest producing asset, Lihir in PNG, considering what has just transpired with Porgera that we covered last week, PNG taking over 50% ownership of that asset. There was reports previously that Newmont CEO was going to divest Lihir, but article in the AFR, the comments alluded to the fact that they wanted to keep Lihir once Newmont take them over. Do you see Lihir, PNG, a bit of a risk for this takeover deal?
Look, Matty, it's a different risk profile, absolutely, and you're the resident PNG expert on the podcast. So I'm trusting your insight as to how things unfold there.
Well, Wafi-Golpu is another interesting one, in addition, because they signed the MOU the other day. So Newcrest have a 50-50 joint venture with Harmony Gold for Wafi-Golpu. So that's the copper gold project in PNG as well. So, and that it's primarily a copper. I think it's the value is about 2.5 times for copper as what it is to gold of what they're going to pump out a year. So there is that, but that's a pretty small producer compared to Lihir. So it's definitely a lot going on in that PNG space. Newcrest are exposed to it with Wafi-Golpu and Lihir. So it'll definitely be something to keep our eyes on going forward once this takeover goes through. So, yeah, it'd be interesting. I'll taken a bit of an interest in the PNG since we've started this podcast. So they're good supporters of rugby league too. So